Good evening, everybody. It's your boy Cordell the Drastic Weights. Today is Wednesday, March 16th, 2022. And I'm here to talk to you guys about a couple stocks that I believe are possible buys in the market, um, where we are at, and upon the flow of these markets and what's going on with the war, and as well as what type of portfolio you can have to have a consistent bounce due to what's going on here in the markets with these volatile times. So right now, we know we have a lot of stuff going on with this war. The markets have been taking right now, so people believe there's an opportunity to buy in the markets as in the last trading week. And currently, China has been hit a lot. Some of their stocks, people say that those in this, that areas uninvestable, and pretty much uh, people want to put a pretty much a good gamble in the U.S. market. Of course, our market has been way up compared to other countries, so you eventually will probably see a swing in those type of other markets as well as a consistent flow maybe in ours, but we could be, some people say we could be at a top maybe in some of our markets. People question companies like Apple potentially losing some of this market cap. So, the way that some of these other companies have lost a lot of ground and their from their lows. So right now we have earnings season as well, getting ready to come up again, and there's a great opportunity to buy some of these being down companies. If you want to go over to China, I do believe companies like Baidu are possibly buys here. Even I think JD.com is a good quality company that's cheaply and fairly valued. Um, Staying in the United States, I believe uh, companies like Amazon, Apple, they are still good companies. Your big tech giants. I'm not going to get into Facebook or Meta platforms or Netflix, but some of these companies, they are solid companies. When you talk about the top tech companies like Google, Amazon, Apple, some of those names. Um, there's some healthcare companies I do like United Healthcare. I do like some of the industrials such as FedEx, um, and even maybe UPS potentially coming up. It might not get the certain gain that it wants to maybe coming out if we do have a bounce, but I do believe in the next several months it will start to gain some attraction. Um, and I do like the industrial area. I do like companies such as Home Depot and Lowe's. I believe that's a great trade right now coming into the type of season that we're in. I do think the financials, they usually hit and feel a lot of pressure. I do believe that they'll come back up a little bit, but I believe that they'll continue to trade right around the ranges that they normally do for right now. But over time, with rates going up, I do believe banks over the long term are good buys. Tech as well, it's a good buy over long term. Consumer discretion has got hit a lot. That we have to see if we're not going to be in a recession. We'll see what the summer brings us in a couple of reports coming from consumer spending. But right now, I do believe we are fairly a good economical company. The jobs report came back pretty solid. Right now, we're looking for the Fed report coming up for tomorrow with Chairman Powell. And I do believe right now we'll be up tomorrow's and the potential futures traders will probably be long in this market because you don't want to be short a trader when we could get a big bounce like this. So if you're already long stocks and you're trading it, I believe tomorrow will be a good day for the market to be up. On top of even with the Feds potentially rating 4 to 5 rate hikes this year, potentially quarterly, and then even getting another one in between. So um, a good barbell approach for a portfolio, I believe, right now will be a 80-20 approach. I believe you can have 5% in commodities, 5% in emerging markets. I believe you can have 5% in the growth fund. I wouldn't just go straight ARC. You could, if you want to go Kathy Woods, but you also could do one of the Spiders KOMP ETFs, New Economics ETF like that. And then I also go 5% on a real estate guaranteed dividend income. ETFs such as Vanguard's one of their products. So there you have it right there for a 20% um, type of portfolio right there before you go straight stock. Like I said, commodity, emerging markets, um, going real estate, and we're going some growth right here. So you could take a swing at that, like I said, RKK if you want to. But for me, that's 20%. I'm going indexing for three of them, bringing the 20% percentage with that, with probably the Russell 3000 to get a little bit more exposure to some of the smaller cap and mid cap companies. I'm going S&P 500 so I could get exposure to the top five, large, stay embedded on the United States straight up. And I'm probably for also go to triple Qs to keep it straight tech. Um, and hedge my risk and bet my risk right there with the tech. So I'll go 60% in indexes like I said, the Russell 3000, the S&P 500, and the triple Qs right there. And then with that, I will pick my top five stocks that I like in certain sectors, whether that's tech, whether it's healthcare, whether that's consumer spending. Um, it's a lot of different areas that you can do, financials or wherever. You know, materials, energy. So you can own um, a Dow Materials or next era energy. If you want to play a conservative, get the dividend yield. I will own a financial like a no potential a credit card issuer like a Visa, Mastercard, or a J.P. Morgan. Even Wells Fargo is not bad either, and it's Morgan Stanley, something like that. I also, like I said, tech. You got Microsoft, you got Apple, uh, healthcare. Like I said, I mentioned United Health. You got Humana. Uh, Moderna's came down. I do like companies like Pfizer. I do like a couple of companies like that. CVS has been good, but I will go a straight healthcare play, not CVS, the one that does the vaccine. So I will go United Health. Like I said, you could definitely build a great portfolio investing in this market. It's your boy Cordell Joshua Wakes. That's all I have for today. Thank you all.